Hi everyone, and welcome back to the channel. I want to take a minute and thank anyone that's commented on a previous video, and I want you guys to know I'm going to try and make videos on anything you comment on in the comments. But now that that's out of the way, we're going to have our first market overview, and it's a pretty big one. Last week was a huge week in the market. We saw a big drop in all three of the main indexes, and this coming week, I'm seeing more of the same. I think we're going to see another big drop because we're going to have the Fed meeting and we're going to see what they decide to do with the Federal Reserve rate. So let's get into it. Last week was September 12th through the 16th, and it was a big week in the market. We saw one of the largest drops we've had in almost 2 years. The Dow Jones dropped by about 1,300 points, the S&P 500 dropped by about 200 points, and the NASDAQ dropped by about 700 points. So why was that? That's because CPI data came out. Now, what is CPI and why did that cause the market to go down? CPI stands for Consumer Price Index, and you can check out the full report in the link below. But I'll give you some of the main details that we saw. Number one, we saw inflation rise 8.3% from August 2021 to August 2022. Month over month, we saw a 0.1% increase, and that gave us 8.3% compared to last month's 8.2%. Is that good? Is that bad? Is that what we were expecting? Well, kinda. Most economists were expecting inflation to be around 8.1%, so a 1% decrease from July's CPI report. But what we saw was a 1% increase, and that gave us 8.3%. Though that is part of the reason why the market went down, there's a bigger reason why it did drop as much as it did, and that's because the Fed is meeting next week. When the Fed meets next week, they're going to take a lot of data into consideration. They're going to think about CPI. They're going to think about unemployment. They're going to think about employment to see how fast people are getting jobs when they become unemployed. Now, they have a lot of other statistics that they use to determine what kind of rate hike they're going to use for the federal funds rate, but these are some of the main factors that they look at. So when the market saw that the CPI report came out 0.1% higher than what was expected, they were in shock. They decided that instead of the Fed only raising rates 0.75% as their max, they thought the Fed might raise them a full percentage point. Why is this important? Why did the stock market drop so drastically because of this one little change? Well, that's because consumer debt is now going to get more expensive to have. That means it's more likely that people are going to spend less money on goods and services, and that could cause an economic slowdown, which is what the Fed wants. But why don't investors want that? Well, that's because it might slow down the progression of what they're seeing in their stocks and their balance sheets, the income statement, the cash flow for specific companies that they're invested in. This might make them grow slower than expected, and that determines what a stock's value is going to be at. So that's part of the reason why stocks drop so hard. So the Fed is going to have their meeting this week, and they're going to have a lot of information to deal with. But something else that's really important to think about is the Fed has been in this state and in this mindset where they want to take $95 billion out of the money supply for the economy. What does this mean? Well, $95 billion sounds like a lot because it is a lot. But they're doing this to try and slow down the economy and get this inflation out. What this means for us is that it hasn't really been working. So they're going to continue to take an aggressive stance on inflation, which is increasing the federal funds rate, and then they're going to continue to take this money out of the money supply. I think this is a really strong approach, and I know they want to go for this soft landing they keep talking about, but if they continue on this path, I think it's going to be a lot harder landing than anyone is anticipating. So this was our first market overview, so make sure to leave a comment to let me know if you like this type of thing or if you want something a little different, and I'll try to adjust it based on what this channel really sees necessary. Also, we're going to have some videos later in the week, and I think this is really important to talk about the $95 billion that the Federal Reserve is taking out of the money supply, the federal funds rate, and where we see it going from here and what's going to happen after the Fed meeting, and then also how this federal fund rate increase and the increased price on getting consumer and government debt is going to really affect the federal government, and we'll talk more about that in another video. So make sure you like, subscribe, and don't forget to leave that comment, and I'll catch you guys in the next one.